Peter Misek, who joins us on the line from Toronto. He's an analyst at Canaccord Adams, and he has a sell rating on Palm. So, Peter, first off, I hope you're doing well. Thanks for joining us. Are you surprised by this news, or does it make sense for you for Palm to put itself up for sale?
I think it makes very, very much sense. The reason is we think that they're burning cash at a very high rate. As you start to burn more and more cash, your carriers become more nervous about your viability. They start supporting you less. Then your suppliers start asking for more egregious terms, and it really puts you in a difficult spot. So this makes sense. It's happening sooner than we thought. We thought Palm would have given it a go a little bit longer and burned more cash than this, but they've clearly put themselves up for sale, and it makes sense.
Okay, well, let's talk about some of these bids. They're coming from HTC Lenovo. Apparently, they're priced for between $1 billion to $2 billion. Does that sound about right to you, or are you expecting more of a premium here?
No, we wouldn't expect more of a premium because it will be a very complicated acquisition. What do we mean by that? If somebody like a Lenovo or HTC buys it, taking the WebOS operating system and transferring it to HTC or Lenovo handsets would be very complicated. It would take anywhere from a year to 2 years. Similarly, if you want to just take their existing line and try and ramp production, et cetera, you have to spec new factories, get new supplier relationships, and you got to get more carriers to certify the device. That would take you somewhere around a year. So $1 billion actually seems, a little high to us. That seems to be where we would have actually been recommending that would be the higher end of the range. But who knows where these bidders decide the value is.
Well, that's really interesting, Peter. So with the value of these bids coming in, does this make Palm a buy then?
If they get anywhere near $2 billion, then the stock is going to go up from here. If they get $1 billion, we think that given they have about $400 million of cash by the time this closes and $400 million of debt, and around $400 million of convertible securities, you're looking at a situation where the stock could fall 30 to 40% from here if it was down around the billion mark. Whereas if it's $2 billion, you've got 20% upside.
Okay, well, I guess we'll have to find out what the final dollar signs are. But let me just ask you, we have lots of names in the ring at this point, HTC, Lenovo, maybe ZTE, et cetera, et cetera. But who do you think will actually walk away with Palm?
We think HTC is probably the most interested. If HTC doesn't buy this thing, we don't think that anyone does. We think it just could potentially everyone could walk.
All right, Cisco is also involved in the bidding as well, apparently. Okay, Peter, thank you for your time. That's Peter Misek of Canaccord Capital joining us on the line from Toronto, Ontario.